China was braced for its first full month of being hit by all the tariffs imposed by the Trump administration. Instead, it has defied expectations as its exports rose in October. Brazil, India, Europe, and even the US kept bringing in shipments of goods from China as businesses rushed to avoid higher tariffs in the coming months. That helped exports grow 15.6% from a year earlier. That beat forecasts of a slowdown and was better than September's rate of growth. Imports also surpassed analysts' estimates, rising to 21.4% from 14.3% the month before. Surplus with its trading partners also increased to $34 billion, compared with September's $31.7 billion.
The Chinese economy has, on the whole, maintained stability while making steady progress. A series of policies designed to stabilize foreign trade were carried out, and the business environment has improved gradually.
Since mid-September, $250 billion worth of Chinese exports to the US have been subjected to increased taxes. Those tariffs have managed to narrow its month-on-month trade gap with the US. But so far this year, the trade surplus has widened sharply to $258 billion from $225 billion in the same period last year. Container rates on Chinese ships heading to the US indicate shipments would remain high through the end of the year. But beyond that, analysts say the robust export growth could begin to stall, especially if talks between the US and Chinese presidents at the G20 summit at the end of the month don't end well. Laila Humairah, TRT World.
Well, for more on this story, let's bring in Alan Wheatley from London. He's an Associate Fellow for Global Economy and Finance at the international affairs think tank Chatham House. Welcome to the program. Let's start by looking at these latest figures. So, Chinese exports to all countries, including the US, grew more than 15% in October. Is this a sign of resilience to Trump's tariffs?
What it tells me above all else is that the global economy is very strong, led by the United States, which is no surprise given the stimulus from Donald Trump's tax cuts. I think we're also seeing preemptive imports as people try to get ahead of the threatened imposition of a 25% tariff in January. But above all, what it tells me is that we shouldn't forget that China is still the center of many global supply chains. And so despite the threats of sanctions against China, it's not easy for companies overnight to suddenly reorganize their supply chains. This is a story that is going to play out over months and years, and not just over a few weeks. If Donald Trump is going to succeed in one of his aims of getting manufacturing to reshore to the United States from China, it's not going to happen overnight. So we shouldn't be surprised that these figures have been so strong.
But we are seeing signs of a slowdown in the Chinese economy, aren't we? From lower GDP growth to weaker manufacturing and a stock market rout. How much of this is connected to the trade dispute with the United States?
You're absolutely right. I think that the trade war is affecting confidence. But let's also not forget that the size of the Chinese economy is a lot bigger than it used to be. So although growth has slowed to around about 6.5%, the economy is twice as big now as it was about 8 years ago. So it's simply not possible for China to sustain growth rates of 10%, which we saw at the beginning of this century. Yes, it's true that the stock market has fallen, but in every country, we have to be careful about drawing a straight line between the performance of the economy and the stock market. But you're absolutely right that the leaders in Beijing are worried about an excessive slowdown, and that's why we have seen measured stimulus over the past few weeks, including a cut in banks' reserve requirements and also modest fiscal stimulus. And I think we will see more of this in the weeks ahead if the economy does want to slow. China does want to slow down the economy. Why? Because it doesn't want to see a continued big increase in debt. So the question is how to achieve that slowdown in a gradual manner. That's a trick.
Yes, and just very briefly, Alan, we've also seen President Xi Jinping recently announce that China is serious about opening up its economy to the outside world, its notoriously protected economy. Is this a reaction to Donald Trump's rhetoric?
He's certainly under pressure to do even more than they have already. I wouldn't call China's economy notoriously protected. After all, China is Germany's leading trade partner. China has recently announced measures to allow foreign car makers to take 100% ownership of their joint ventures. China's imports are growing as the economic model switches to more consumer demand. But it's absolutely true that he will need to do more to satisfy Donald Trump. The trick is that China wants to open its economy gradually on its own terms, and there's no guarantee that this will be swift enough to satisfy Donald Trump when they meet in Buenos Aires at the end of the month.
Okay, Alan Wheatley in London. We'll have to leave it there, but thank you again for your time.